Everybody, happy Tuesday. Yeah, got it, man. Zoom's getting all these kind of fancy little things going all of a sudden. All right, so let us throw that in there here. Happy Tuesday. Bam, there we go. Cool. Alrighty, how is everybody? Let's dive into it. So a lot of news this week, which is actually good, right? News is the excuse. And bear with me here. Let me. In case the feed kind of starts going crazy, just bear with me. If you guys live in sunny South Florida, it's everything but sunny South Florida right now. So it is what it is. No big deal. Hold on. Let's see. Put that bad boy right here. There we go. Bam. All right. Welcome. All right. So now we're good on. Let's going crazy. There we go. All right. Cool. We're good. Let's jump right into it, guys. So happy Tuesday again. Let's close this out. Call it a night. All right. Cool. What's up? How's everybody? All right. So we're not going to waste any time here. All right. I'm a little hungry, so I'm going to try and get through this relatively quick, maybe an hour and a half. We'll see how it plays out. But we just had some NZD, some Kiwi news, and I had a bunch of alerts going off. So I don't have any limit orders on any Kiwi stuff, but I am obviously looking for some moves. So we'll cover it. We'll go over it. There's also some Australian news, but I'm not expecting too much volatility out of it. And then Wednesday, we're going to see some movement on the indices, and I'm going to cover some indices because I think we may be in a position where we're going to see some decent moves on those. Let me just lower my AC here. All right, cool. And then coming into Thursdays, where we're going to start to really see some volatility, right? A lot of pound news, a lot of pound news. So this is going to be really nice. I'm going to definitely like some pound pairs. I'm actually looking at GAGN. Obviously, you guys should know from last week, pound Swiss franc, pound JPY are definitely some good plays. We will also have, if you guys haven't seen it, there is going to be some more Australian news. This is going to be, and it's kind of weird that they're doing it on Thursday, but this is kind of what happened last night right in here. So whatever they're going to talk about, and again, if it's going to be more of a dovish sentiment, we're going to see some bearishness on the Australian dollar. If they're going to be hawkish, it's going to be, obviously bullishness. So we'll see how that goes. And then that rounds it up to Friday, right? Friday, NFP for both the Canadian dollar and for the US dollar. So, typically I don't really look for a lot of setups on Friday, but I will look for that $1 cross pair. And typically it's always EU to try to get, if anything, a small little scalp out of it. And if not, I'll see if I get some continuation out of it. All right. But that is ultimately what I'm looking at. Really nice volatile week compared to last week, which was really, really slow in terms of some news events. But let's dive into it. Let's get into the charts. We'll see what I know. I've got a bunch of alerts actually. Let me turn off all these alerts. I don't need these bad boys. All right, cool. All right, so I'm gonna do a little bit. Just a little bit of alerts. Actually, yeah, it sucks because they're in the area that I wanted to take a buy, but I'm not buying out of Asian. So we'll come back to it. We're going to do a little thing different. We're going to start from the bottom, work up. I'm just going to mix it around. We'll talk about GU. So GU real quick, from, ultimately the original intraday buy that I've been holding now for, I guess, going on like 2 weeks. This is still being maintained. I partialed out twice out of it, and I'm still holding what I have. What I do, or what we were looking at this morning, this area right here, this was caused by FOMC last Wednesday, and we'll kind of break into what I was looking into this candle. But ultimately, what I wanted to see was see if we can get a play out of it, because this to me is my slingshot that ultimately caused a lower time frame break. All right. So this morning, New York session, I was really kind of pay attention to GU. And again, why was I looking at it? So I was looking at it because we have this right here, which was the manipulation that happened during FOMC, and we have a reaccumulation here. So both areas, demand areas, right? This is my slingshot. This is the extreme that ultimately pushes in the new high. And as price, as price, I wake up and I start to see that, well, okay, we got a nice little type 1 schematic. We definitely have all of our drives. We have our spring. And ultimately what I wanted to see was I wanted to see us break structure, which we did. We ended up breaking structure. And what I wanted to find was the most voluminous candle. So for me, it was the 106. I know I was playing around with like the 358, but I was waiting for the 6 minute 80%. 6 minute 8. You were waiting down here in this. I'm guessing that's where you were waiting, right? You were waiting here. Yeah. Well, I mean, listen, if price is accumulating here, you got to play out of the accumulation. So, when we broke, this is the 106 that I was looking at. 80% of it is where I wanted to take it. And this is what we were looking at this morning. I know a couple of people took it. I know, I won't call them out, but I know somebody passed their prop trading challenge with it. So kudos to you, man, for that. That was a good play. And, ultimately looking at was, this is the spring, this is the reaccumulation, and, sell me on the idea of taking this trade. And, I wanted to see a distribution in here. I'll be honest. I didn't put a lot of risk on this trade just because it was Tuesday early in the week. But what do we have? We have the Asian lows sitting right in here. So we got some liquidity sitting from Asia. And then we have this imbalance. So how I played it, I threw a little bit of risk. My stop loss was at the bottom of this reaccumulation, and entry was at that 106. So coming into New York, we had really nice movement, and you could see price comes in, tags in right around like 10 a.m. Eastern, and we have a type 2 schematic that forms. Let's go like 15 seconds. So we have a really, really nice schematic that forms in here. And ultimately, the way at least I managed it is, as soon as we did this, right? So as soon as we made that move and showed some bullish order flow, I reduced my risk to the bottom of this wick. And then, of course, once we made this high into that, I reduced my my risk to the bottom of this wick. And I was actually looking for a second entry out of here. So that's how I was looking to play it. What you got? Yeah. Did you take it? No. Yeah. Did you? If you took it, awesome, man. Yeah. Good job if you took it. Yeah. So I'm actually, wait a minute. Let me see here. So you're looking on the 15-minute. Gotcha. Yeah. So yeah, this is okay. Cool. Good. Yeah. Yeah. So all day long, this is where I was looking to take the re-entry. We just didn't get it. I was getting a little greedy with it. You took it too with EU. Yeah, I didn't take a buy on EU. Just GU. EU for me wasn't the area yet that I was looking at. Yeah. So I mean that was in a nutshell. It's a clean type 1 in an area that I was really looking at, and at this point it's at break even. I will be looking for re-entries, but not until we take this high right here. So we pop up here maybe during London. The area that I'll be really paying attention to is going to be this area of reaccumulation right in here. So this is the area I'm going to be paying attention to. So I haven't really done anything on it. I'll take a look at it maybe tonight before bed, maybe something in there, maybe something down in here, but I'll definitely take a look, but I'm happy with what it's at. It's risk free at this point. Yeah. But overall, really good price actually, especially for a Tuesday, and we'll see, ideally, let me just see, hold on, with that high, and this is where I'm going to partial out. I'll take my first partials right here, and we're looking at a 1 to 10. So I'll take my first partials and then we'll reevaluate. I definitely, what I want to do is, I definitely want to invalidate this nonsense of a distribution up here, right? Because at the end of the day, this distro did nothing. Actually, this distro invalidated the previous distro, which is kind of why I definitely was going in on this. This is the area of demand that pushes in the high. And I was really happy with the price action that I saw. So, GU, again, nothing really for me to take until, actually, let me move this right there. Hold on. Okay. So, as soon as I see this buy, that's, this high taken, I'm going to be looking for another continuation play. All right. Hold on, bear with me before all my ring cameras go off with all this rain. It is pouring rain right now. I ain't gonna lie. Oh, madness. That's crazy. Okay, no worries. Give me a second. All right, cool. All right, there we go. SPA, you already thrown out SPX, bro. Jeez, hold on. On this one, Matt, I'm just going to take 25%. I'm going to take a quarter of the volume. So with that calculator that we use, it's just going to close out one. No, my backyard is the Everglades, bro. My backyard is the Everglades. I live, let's see. Yeah, my backyard is the Everglades. I live, yeah, just to give you guys an idea here, this is the Everglades right here. This is the Everglades, all this marshland right here, and I live right here. So it is it is the Everglades. Yeah. Let's see. Can you go over EN? Yeah, I definitely got EN on there. What you got on SPX? So on the 15 minutes, yes. Yeah, I mean, I'll be honest, I like US 30 a little better, but we'll cover it, man. We'll cover it. What calculator is that? Is the UT and UTAC correct? So for me, no. And this is why I like US 30, but we'll cover it. For me, this is a type 2, and on US 30 we had a type 1. So just compare it, right? Like when we look at comparable divergence, you'll notice that it's in the same schematic. US 30 actually did this. So you have divergence between US 30 and SPX. So US 30 is the laggard. And then you'll notice that when we came down to this area here, US 30 broke this lower first. So we'll talk about it. We'll definitely get into indices. That's the main reason why I like US 30 better. So yeah. So, but who knows? I mean, it can turn into a reaccumulation, what broker do I use? So I use Awanda as my main currency broker. And then because I'm a US resident, obviously I can't trade CFDs with Awanda. So I use FX Choice because they're a regulated broker. But if you're a US resident and you don't have FX Choice, you can't use them anymore because they've stopped taking US residents. So awesome, man. Yeah, you got it. Can you please write it? Can I please write it? Write what? The broker? Yeah, no, just look it up. It's Awanda. It's a pretty well-known broker. Hold on, what you got? You got US 30 here. So now for me, US 30, this was the UTAD. We'll cover it. Yeah, we'll cover it. And we'll talk about it. No worries. We'll get into indices. Yeah. So GU, it's pretty straightforward. Just follow the schematic. And of course, the next thing that I'll be looking for is going to be the LPS entry. Somewhere in the neighborhood of here. All right. That's kind of what I'm going to be looking at. Hey, what's up, bud? Did I have a limit? I put like a 16th of a risk on it, man. Just because I was going out, I had a run to the dentist with my daughter, yeah, so I put in a small risk in it. That was it, man. And yeah. Yeah. Well, it gave a schematic too. I know it gave a schematic. Just look on I know you don't have the seconds, but it did give a schematic in there on the 15 seconds. So Will I look for the most voluminous candle? So ideally, this is what I would be looking for, right? I would be looking for this. So find, let's see. So maybe hold on, let's just look at it. Maybe the 2 minute. Give me a second. Let's see now. Let's go 3. Yeah, I mean, I'll be looking for some confluence somewhere in this neighborhood. I just haven't really devoted a lot of time to it yet. Just because I'm not going to spend too much time, because if this ends up hitting my break even, then I'm not going to play it. Yeah, I'll tell you right now, I would focus in on this price action right here. This is where I would be looking for my entry. So, you know, we can see that this ends up sweeping below here. So now what we want to do is, does price mitigate all of this? And it does look like we get some kind of mitigation in here. We do make a new high here. So, you know, maybe something in this, and it looks like it comes to 50%. So maybe that, right? That's how I'll look at it. Or just find what candle is encompassing this entire range, you know, so maybe like I don't know, like if I had to guess, maybe like a 22 minute, maybe something like that. Oh, that's pretty damn close. Here, let's see, 21 minute, 23, 24, 25, somewhere in there, you know, like that's what I'd be looking at. Let's see, what's the 50 look like? 43, 54, 49, 48, 47. Yeah, I would find confluence in something in here. You know, that's ultimately what I would be looking at. Let's see, 51. No, so 50. Yeah, the 60. No, the 60 is going to be the entire. No, not the 60. Yeah, no. Somewhere in this right here, like this is that price action I'd be looking at right in here. So that's something I would be looking for. Okay. Find confluence in that, and that's where I'll play it. All right. The 35 minute. Yeah, I mean, that was close to the area I was looking at. Yeah. So find this 35 minute and then see if it lines up with like that 51 or something like that, or maybe the 49, and then get down into the lower time frame. You know, like if on this 35 minute, like just say, take for instance this, right? So we come over here and we throw in our 50 and 80, right? And then just start working it down. You know, do we have confluence? You know, so let's see. Well, you can see the imbalance above it. You know, I kind of want to see if that sucker kind of gives me some imbalance on the low end. Oh, nothing so far. Yeah, so this is where it's going to be troubling because there's not a lot of imbalance in here. And this is what I was saying, like price was really nicely traded in here. But this is definitely the area I'd be looking right in here. That's what I talked about. You know, when we were looking on like the seconds time frame, that's what I was talking about in here. This is where I'm looking. So, you know, if it's one of those where what's the risk to reward to you? You know, if you took it off that 50% down to maybe this low, it's only 5.4 pips. You know, so maybe that's something you want to take, just 50% of that 35 minute, right? So yeah, that's something I'll look at. What's my thought process behind it? Man, about 5,000 charts of back testing in 3 years of trading like this. For me, it's the most voluminous candle. I know a lot of people use like volume profile and, you know, stuff like that. For me, I just find the most voluminous candle. And I know that there's a pretty good likelihood that price is going to trigger off of 50 or 80% of it. Yeah. So that's why I do it. You know, like in this case, it was the 106, found the 106 and we came into the 80% of it. So, but yeah, not structure has to be broken. We just need to make a new high. So yeah, you would need to see, or at least I need to see this, right? I need us to do this. and then we can come back down to it and then go higher, something like that, right? That's what I need to see. All right. And nothing. Yeah. Like I tell you, I mean, like everyone, there's 1,000 ways to trade, there's 1,000 ways to skin the cat. So just back test it. I mean, I think for the most part, everybody on here, you guys can definitely corroborate the most voluminous candle thing. I know a lot of traders just want to make it simple. All right, I'll take the 4-hour candle. I'll take the 2-hour, the 30-minute. But when you really want to fine tune your entries, this is how sometimes, we're able to get 0.8 pipette stop losses and like a 1.2 pipette or 1.2 pip stop loss, because we're really refining it. So cool. How do you decide between 1 minute BOS or 5 and 15? So I guess the question for you would be, what's the difference between a 1 minute, 5 minute, and 15-minute break of structure? Because for me, all of them are the same, right? So like, let's just take the schematic, for instance, right? Out of this schematic, and let's walk structure through real quick, and then we'll move on. But out of this schematic, we have what? We know that this is our low, right? This is our low. And the previous low is what? It's this, right? So for a schematic purpose, this is the high that I need broken. And this is on the 5 minute, right? On the 15-minute time frame, right? Hold on, let me see if I can line it up. On the 15-minute time frame, I can't. On the 15-minute time frame, does that change? No, for me, it doesn't. We had the low, we had our previous low, because this was lower than this. And then this is the high that pushes in that spring. So this is still the break of structure. And I guarantee on the 1 minute, it's the same thing. So I personally, I'll tell you right now, when it comes to structure, I only have, and I know it's like, I know I say this every week, I only have 3 time frames. I have a lower time frame, I have an intraday, and then I have a higher time frame, right? And for those of you guys that we did the back testing video Thursday, I created the higher high time frame. And then what did I do that 5-second schematic we did was the I'm going to start I'm going to start copywriting this super duper micro schematic. So I'm making up stuff at this point, but super duper micro schematic is when you get it to the 1 second and 5 second accumulations in distros. And then the higher time frame was, I think what we figured out was maybe a monthly leg and stuff like that. So it created a lower low at the spring area. And that's why I don't use FXCM. Yeah, for me, FXCM is garbage. But Owanda's getting there too. So, you have to, I'll tell you right now, you honestly just have to decipher through the BS. I don't know what FXCM and Owanda have been doing in the last 6 months, but their price action is on the actual stuff is just horrible. Is my back testing video on YouTube? No. This is, I do for people I mentor and that are on my actual training group. We do a weekly training session. So that was just, that was our weekly training session that we did. So anyway, that's GU, right? I don't want to spend too much time on GU, otherwise dinner's going to get cold. All right, so GJ, let's recap GJ, right? If you guys remember last week, GJ, I was looking, and I posted this in the Discord. I don't have Discord open right now, but I posted in the Discord. And essentially, I was looking for a sell out of this distribution. All right, so GJ was very, very honestly, it was an easy play, right? We know from a intraday perspective, we broke intraday right here, right? We broke intraday, so we're bearish. All right, we're bearish on the intraday, and we know that just by walking this down like this, we're bearish on the lower time frame. So 2 out of 3 for me. And the most important thing was this area right here, this distribution was what? The slingshot of the intraday break of structure, and it was also what maintained our lower time frame, right? It's also what maintained our lower time frame structure point. So for me, it was pretty simple, find the candle or find what I wanted to set a limit off and then wait for a schematic. So I actually took a small loss on this, but this 1 hour candle right here is what I was going to play out of. I had 80% of that 1 hour candle. And let's see, where's current price action? So 80% of that 1 hour candle is where I wanted to play. And the rest of my risk was going to be in the form of a distribution. And we got a super clean distribution in here. So you can see ultimately what happened. We had, 1, 2, 3, 4 drives. The problem is I got into this early, right? I thought this was going to be the UTAD. When we broke, I took a position out of here, it danced around and then took me out right here. So when it took me out, it actually triggered my 80% of the H1. And then of course, all I was going to do was play once we broke this low here, I was going to play back out of this 80% of the H1 and just play it lower. Unfortunately, this thing just never came back. It just collapsed. So, it is what it is. I did take the, whatever it was, the 1/8 of a percent loss, but, I did take some partials, and you can kind of see, I secured a 1 to 13 when we got here, and then a 1 to 24 when we came into the 151,800 area. Yeah, bro. Yeah. Good job with it, Matt. Good job, bro. Again, how many times have you guys heard me put limit orders on the extreme? If it's a structure point, put your limit order on it. It's all about the percentages. So I was, redistribution. So where I was looking this morning, and this is my new symbol for the Asian liquidity. You did awesome. Good job, man. My other order at break even, I wanted to play man. I'm still waiting. We'll see. Don't count it out, because what happens when we make this low, right? When we take this low down here to the left, then what? Then this becomes structure, right? This is the extreme. So yeah, it's just a time. You got to wait on it. If time allows, can you please cover how you identify the extreme? How do I identify the extreme? So it's like the extreme unmitigated portion of the extreme candle. So for me, it was that 1 hour candle in there. There was a lot of other confluence. I think it was like a 12 minute, a 5 minute as well. But it's for me, it's not, do I miss extreme entries all the time? It's just, I have to find that happy medium between a decent stop loss. And in this case, it was like 6.5 pips, and where price could actually come into. So, but yeah, what I was looking at this morning, obviously I was looking for price to come into here, and that kind of failed. So what I'm personally looking at right now is, and it's only going to be dependent on the session time. Like, I don't want us to get in here now. I kind of want this to dance around. If we get into this push right here, I'm going to look for a lower time frame distro. If I can get that lower time frame distro, I'll take it. And the reason is because this was the slingshot that broke this low. And then what do? We came back and tapped into that supply point and then made a new low, taking out all of this. So, it's only logical that the first area I got to look for a sell out of is in this green box. I'm not going to set a limit order off of it, because this is not structure. It's just order flow. And at this point, what I would be looking for is I'd be looking for a schematic to play out of. If we get it, great. If not, then, I'll just see where we're at during New York, and I'll try to work in a position. But I mean, this thing has moved pretty nicely. At one point, this thing was 228 pips from original entry. It's the yen. It's the yen, like the actual yen currency, and the Japanese flag. So that's my new Asian liquidity. Would you look for looking buys at 151,800? Wait. Would you look for buys? Why would I look here? Why would I look for buys here at 151,800? Why is that not structure? Why is it not structure? Because for me, this is where structure is being maintained right now. Hold on. So for me, this is what's maintaining structure until we make a new low. When we make a new low, this will maintain structure. So yeah, that's why. Before the, wait, would you be looking for before the Asian lows? Okay. Yeah, I'm completely lost, man. Before the Asian lows. So wait, before this created, was I looking for a hedge? Is that what you're asking? No, I wasn't. Yeah, you can ask the people, you can ask the people that were in the group. Yeah, no, I'm not looking for any buys. The reason why, I mean, so why am I not looking for buys? Because I'll tell you right now, this is a trap. This accumulation did absolutely nothing. And nothing in here did absolutely nothing. I'll tell you right now, the only area I'm going to be, well, yeah, no, I'm not even looking for a hedge. I'm just looking to take buys. I'll look for a hedge after we take this low. Yeah, there's really honestly nothing, no reason for me to work a hedge buy in this. Yeah, I mean, this is for my personal trading plan. It's not worth it. There's no risk involved. There's more risk involved in trying to do it. So yeah. But that's GJ. I mean, I'm continuing to take this down. If you look at if you switch over and you just look at pound futures, it supports it. You can kind of see not pound futures, I mean JPY futures. If you look at JPY futures, let's go up to, yeah, you can see how we've made a new high, right? We had this really clean accumulation, and then what have we been doing? Just making new highs. So, I'm expecting this to just continue higher on JPY crosses. That's why we're seeing, whatever it is, XXX JPY, just coming down. So I do like what I'm seeing on it. The yellow snow indicator called session. I mean, it's whatever you want. I mean, I have a couple. I use sessions on the chart, and then I created one that just says Asian session range. Yeah, but sessions on the chart. That's what it is. Okay, so that's GJ, right? Pound CHF, right? Pound CHF, phenomenal trades. So again, like when we were looking at pound CHF, just from a top down, right? Top down, we're bearish, right? We're bearish from up here, right? So we're bearish on the higher time frame. From an intraday perspective, right, we're also bearish. And the reason we're bearish is we had price distribute, come down into an area of demand, reaccumulate, continuation move into a distro. So this is what's maintaining intraday. All right. And then ultimately we break it right over here. Well, how do we break it? In the course of a failed accumulation, which is a redistro and another redistro, and just a lot of failed accumulation attempts here, right? I took a bunch of break evens out of this, trying to buy it up. And ultimately what happens, right? We have a distro into a redistro that pushes in a new low into a distro that causes the intraday BOS. And now this is what's maintaining the lower time frame structure point, right? So when price comes in, and what I was looking at for me, what I was looking at was in this candle right here, right? This is what I wanted to look into. I didn't have a limit order set on it just because the stop loss was too big. Stop loss would have been something like, I don't know, 15 plus pips. And most of you guys know that I just, those days of taking those big stop losses are over. So what do? We saw that, price, let's go down here, like the 30-minute, we saw that price was building a schematic, right? So coming into our point of interest, what do we have? Clearly defined trading range. We have a 1, 2, 3 drive. Price comes in, and then what's it do? Creates a UTAD, right? Creates the UTAD on that intraday. And of course, from that UTAD, what do you got to do? Just drop down some lower time frame, drop down to the lower time frame. And, what do we start to see here? We start to see another clean schematic in here, right? Very clean schematic. And what did I need to see? I just needed to break a structure within the schematic, and boom, we got it right there. So where I was looking at an entry was out of the 88-minute full volume candle, right? There she is, 88-minute, right? 80% of the 88-minute was also 50% of the 5-minute. And then you could clearly see the imbalance, the IPA. So, this was relatively it was a 7 pip stop. I mean, it wasn't anything to to write home about, but it was still a 7-pip stop. It was still something I really wanted to pull into. And then what does price do, right? So price gives an accumulation, right? And if you're just stuck, this is one of the things, if you're just stuck on a 1-minute chart and you're looking at an accumulation like this, you got to ask yourself why. Why are you getting that tunnel vision? Because this is not something I'd be taking a buy out of. Ultimately, 88-minute, 88-minute. So, ultimately what happens, right? Price comes in, tags the entry. Now, I actually reduced risk and I closed, or I didn't close, but I hit break even on half of my position. It is what it is, no biggie. But what we did see is on the 15-second, look how super clean this thing is, right? Look how super fractal everything is. We're talking about, remember, this is the UTAD of the intraday distro inside of the test, right? This is the test of the lower time frame distro. And now you're seeing a schematic within the super duper, the micro fractal schematic, right? All of it is for a reason. So like when you start to see, if you're like looking, this is just some advice, right? When you're looking and you're like, man, why is price lingering in here? I want it to just go, pay attention. Like why? Well, oh shoot. Okay. I see the distro here. It's actually doing something, right? And that's what we wanted to see. So out of this, what did I want? I wanted, as soon as we made this high right here, you could see the UTAD comes above it. As soon as we made that high, I just wanted the break of structure. And unfortunately, it didn't give the break of structure. So this right here is actually the test of the UTAD. No entry for me, no break of structure, no trade. Okay. But now where I was looking for another entry, right, was in here. So what I wanted to see was actually here. We'll just go to the 1 minute. Okay. What I wanted to see is I wanted to come in to 50% of this push. We don't get it. Instead, what do we get? We get this move. So now what I wanted was, all right, so what is this, right? This is what the LPSY. Look how clean this schematic is. I wanted the LPSY entry. So I know a lot of you guys caught this. Congrats. Awesome job. For me, it was the 2-minute candle, right? 2-minute candle. And it lined up cleanly with the 30-second imbalance. So 80% of that 2-minute candle is where I played. And where is it? So 80% of the 2-minute candle, and here it is, 2.5 pip stop, right? So 2.5 pip stop, we come in and there she went, right? Tagged right into our 80%. Just some like trade management on this, right? So how at least I managed it, right? As soon as I got popped in, when we came and saw this reaction, and then we made this low and we recreated this bearish order flow. As soon as that happened, I reduced my risk. And as soon as we broke this low, break even. That's pretty much as simple as it was. Nothing too crazy. Protect your assets, protect your equity, and then just play it out. So, I partialed out, and what I did was I just took, when we crossed this low, all I did was out of both positions, I just took whatever I risked. So if you're trading a 100K prop firm account, right, and you're risking 0.25%, $250, right? So I took 250 out of both positions just to pay myself the 1-to-1, so that now if I get into reentries, because that's what I was looking for reentries, I could throw more risk on the reentries. All right, if that makes sense. You caught the 50% of the 23. Let's see, bro, what was it? Out of this, really good. Yeah, awesome job. Yep, full volume candle, man. They work. They work. Let's see, never gets old seeing these secondary entries. So yeah, and it is, just follow it, right? I mean, I can't tell you how many times we get to stack entries in and just, yeah. On the dude, you don't want to know how many orders I had. Dude, it was a lot of orders. I don't know. Think about it. It was I had 3 entries. So 4 times 3, we're at 12 positions. But yeah, it does get a little crazy with all the orders based off of the TPs, but it is, whatever, no biggie. will it be possible to outline for us maybe later how you manage your trades and risk? Listen, man, that's a tough one, because that could take, I mean, that takes, not only does it take time, but there's so many scenarios that go into it. Yeah, that's a tough one. Let's see. Yeah, 4 positions each. Yeah. What do you consider full volume? Yeah, yeah, I mean, they're called like Mariposa candles with no wicks. You want to find the most voluminous candle. The one, I mean, sometimes you can't find something with no wick, but you want to find the most voluminous candle, right? That's what you want to find, because that's where all of the orders are sitting. All right. So yeah, partialed out here. And then you'll see, I was looking for a reentry right here on the 46-minute. So I wanted the 46-minute candle, 50% of it. This stupid thing doesn't come to the 46, right? But what it does do, let's take a look. So this was the next day now, right? So the next day, what do we see? We see some Asian price action. So immediately, what do you think? That's one of my targets, right? We're going to take these Asian lows. So coming into the 46, my POI for the 46-minute, right? And this actually got me a little hot. So what do we have, right? We have clean distribution. I took an entry out of here somewhere. I actually got stopped out because of spread. My broker, my Owanda, my personal broker, stopped me out. They jacked up the spread for some stupid reason coming into New York session. So I was a little pissed. Now on my prop trading account, you could see like here, if I throw the line, you could see how this wick does not trade above. So on the sell side, if you guys, especially people that don't understand this, on the sell side, you're subject to broker manipulation. On the buy side, you're not. Price has to physically trade below your stop loss in order for it to trigger, where, on the sell side, brokers can do whatever the hell they want, which pisses me off, Give me one sec, guys. Let me throw my fan on. Hold on. Alrighty, cool. All right. Yeah. So I got triggered on here. I was in it. And actually I didn't trade this on my FTMO account. I just traded on the prop trading account. So on the prop trading account, I still stayed in it. But now what I wanted to do was I wanted to trade into this box right here. This is what I wanted. You could see I was looking at this 50%. And what price ends up doing is we don't come into 50%, right? But now what we do is this, right? We get the boof, right? So we get our break of order flow. And the way I did this was I broke it up between my slingshot and then the extreme. So I had a split risk. I had one off the 50 stop loss up here. And now I was looking in here, right? And what I couldn't find, I was searching for a little bit. I was looking for the candle that did this, right? So all I did, I don't know if you can tell, but I measured from this high to this high. It's this candle, right? It's this candle here. And you could see I had 80%. Why did I have 80%? Because when price, if this is the low, when price traded below it, it came back into the 50%. So the 50% was mitigated already. And if you pay attention to on a seconds time frame, if you don't have seconds time frame, don't fret about it, right? Because why? What is this? This is a distribution, right? So on the 1 minute, that's what it looks like. But if you come over here to like the 15-second, there's your distro, right? Super clean. All right. What do we have? We have trading range. You have buying climax. You have AR. You have a secondary test. You have an MSAL. You have an up thrust or secondary test, depending on if it covered or not, but who cares? It's still a secondary test, right? An up thrust is just a secondary test that trades above it. And then what do we have? Then we get the UTAD, right? So again, I measured the UTAD move and then I wanted 80% of it. That's what I wanted, okay? So that's what we were looking at. I really liked that entry. And you can see this was it, right? I was looking at it here. This was I think it was like a 1.5 pip stop is what it came out to be. And I know a lot of people caught this. It was a really good job, right? 1.5 pip stop. That's where I was looking. 80% of that UTAD is where I wanted to play. And, again, it was only after the boof that I was able to really jump into it. So here she comes and pops, triggers me in, right? triggers me in really nicely. Now, at this point here, I personally didn't go to break even yet, or I'm sorry, I didn't go to reduce risk yet. I went to reduce risk right there, right? So right there is where I went to reduce risk. So price comes back in and then makes the new low, right? Makes the new low, reduce my risk. As soon as we trade this low here, break even. It was that simple. All right. And then, you can kind of see just what happens, right? My target all day long were these Asian lows. We smacked right through it right there. You'll see right, boom, right there. So that was it. How did you decide when to keep How do you decide when to keep stacking orders? Just follow the price action. Honestly, I know it seems like so if price stops me out, I stop stacking orders. But as long as just look at distribution, distribution. When you ask yourself who's in control, supply or demand, supply is in control, or distributing orders. Yeah. On this specific entry you're discussing, you took it at a quarter as usual. So I can tell you what I did, right? Me personally, because I took the 1-to-1 here, right? So here's a little bit of trade management, right? So let's just say for easy purposes, right? We're trading a 100K account. And I had $125 on the 88% here, right? On the 88%. And I'm sorry, I had 250, right? Because it was a 0.25% risk. So I had $250. I closed out 2 of the orders because they hit break even. So that meant I have $125 at risk when we were here. Okay. When price ends up going to where I can go to a break even, right? I'm still wanting to put $250 risk. So what I ended up doing, because I had split entry here, right? This order here is $125 risk. This order here is $125 risk. Now, when I came and I wanted to take this entry here, all right, because I had already secured 250 and 250 here on the 1-to-1 when we traded below the low, where I took partials, I now had $500 in equity, right? So what I did was I threw $500 on this trade right here. So where this one was only 125 per whatever 6 pips, and this one was only 125 per 2.5 pips, this one here was 500 per 1.5 pips. Because now if I would have gotten stopped out, what's the most money I would have lost, right? In reality, nothing, because these would have been broken even, and the $500 here, right? I already pocketed that. I already took that. So I'd be zero for the day. So this is the stuff that makes really good traders, right? This is the stuff that took me a while to wrap my head in. And not only that, but this is the stuff that you got to think about when you're on a 5-minute chart and all of this is happening in the span of 24 hours. All right. So hopefully that makes sense. If it doesn't, just rewatch this video. Yeah. So hold on. Let me see if I can catch up. Wait, why was this the slingshot candle and not this? Wait, and not this one? Is that what you're talking about? Hold on. 26,790. Yeah. So because this is the distribution, right? All this is a continuation move. So this is continuation. This is actually the schematic. This is where supply came in. So yeah. Yeah. So here, hold on. Let's go back to it. So hold on. Let's see. You're talking about all right, hold on. The most recent okay, hold on. So let's go back to it. Okay. So on the 1 minute, so you're talking about in here? Yeah, okay. So hold on, let's look. So when we were, you're talking about, okay, so this is what you're talking about, right? You're talking about this, right? Why didn't I take this? Okay, so schematic test, LPSY. LPSY is also, right, that 5-second distribution. What was this? This is just a redistribution, right? If that makes sense, if it doesn't make sense, remember market cycle. So where is the last point of supply? This is the last point of supply. This is what a continuation move. It's a redistribution, failed accumulation. So if I'm going to put risk on, it's going to be from the last point of supply, not from the redistribution. Does that make sense? Thoughts on gold? Yeah, we'll go over gold eventually. Tips determining the POI. I'll tell you this. Go always ask yourself, when you're looking at a POI, what did that POI do? If the POI did nothing, if it didn't cause a new high, new low, or break a structure, it's not important to me. Go when you're back testing that, always look at the POIs. What did they do, right? So in this case here, what did this POI do? It was the distribution that led to the boof, right? This, I'm not saying it's not a POI, right? So like if this was not a 15-second, but a 15-minute chart, I'd be looking at this, and I would be looking at this potentially here for an entry, but I would need to see a distribution, right? And you can kind of see it started to distribute, but then ended up just failing. So you're not wrong in saying that, okay, this is the slingshot. You're not wrong in that. It's just, this on a 15-second chart, I'm not interested in trying to catch a distribution here like this. If it was a 15-minute chart, yeah, this redistro and then this distribution, these are my point of interest number 1, point of interest number 2. Okay. So yeah, hopefully that gives you a little bit of clarity. What do you use for smart money divergence with EJ? So EJ, I'm trying to think what really helps with EJ. I'll be honest, I don't remember the last time. So typically what I do with EJ is, man, I'd have to look at my notes. I'd have to look at my notes to see what I found. I haven't looked at a comparable strength on EJ in a long time. I know it's, I can tell you right now, it's something that I invert. So I'll have to look at my notes. It's something that, I invert. I'll have to look at it. Yeah. I wonder if it's UJ. I think it's UJ that I invert. But I'll double check my notes. On the chart, the test was not mitigated. Which we talking about right here? Like, you're talking about this test wasn't mitigated? So yeah, remember, it doesn't have to come to 80%, right? Just remember this. So if we are correct in the candle, right, that we are looking for. So is this entire shaded area, is this not the test of the UTAD? Yes. Does price come to the open of the candle? So I can tell you right now, if I'm correct in the candle, 100% of the time, it's going to come to the open, right? So when it comes to the open, that is the mitigation. When it comes deeper into the open, that's where they actually make money off of that mitigation point. So you can think of it from a perspective of, if it comes to the open and then reacts, then that's a dead break even for the algorithm. When it comes into a deeper retracement of it, then that's when they're actually closing in profits on it. All right. Let's see. Isn't there a yeah, but I'll be honest, man, that list isn't as accurate, yeah, that list isn't as accurate. So yeah. No, I know it doesn't come to 50%, but it does come to the open. So all right, cool. So yeah, this was a clean little entry. And then where did this, where did I take some partials? Obviously you could see partial secured right at the breakup structure. Now, why did I take it there? Hold on. So right there. Okay. So took partials right there, right when we took this breakup structure. Well, why? Because this is the breakup structure that we needed to confirm this distribution, right? So I secured it here at a 1 to 11, 1 to 30, 1 to 36, right? 1, 2, 3 orders. And then from there, what I wanted to see was I wanted to see an entry out of this area. And I'll just save us some time because price doesn't come back into this area, right? And then ultimately I took some more partials at these Asian lows here, right at a nice round number. You could see 120, 155, and 1 to 78 is what I secured. All right. So I've taken now, the 1-to-1 out of the first 2 orders. I've taken a second set of partials here, a third set here, and 2 partials out of this order. So, really nice price action, really good. I like it. Where I am personally looking for a reentry, and I know, again, what does that look like? It's like an accumulation. I'll tell you right now, I have no desire to try to buy this, right? None whatsoever. Not even for a hedge. Why I'm looking in here, right? And, when you think about it, keep it simple, right? Trading is very simplistic. It's very convoluted. There's a lot of moving parts, but it is very simple, right? And this is why. So what do we have in here? We have a redistribution, right? Price attempts an accumulation multiple times and then fails. This area right here is responsible. This area right here is responsible for the break of structure that confirmed the large schematic, right? Can everyone see the type 1 accumulation that happens here on the 5-minute chart? All right. What about on the 1-minute chart? Can you see the type 1 distribution that happens? Well, let's go to the 15-second chart. On the 15-second chart, here she is, right? We have a distribution. This is where supply comes in and actually fills sell orders. So what do we have, right? We have clear drives, a UTAD, and we have a test that comes back and mitigate, and then we drop. So where I'm personally looking is in this green box. Okay, this entire thing is what I'm looking at. Now, notice that the open of this push, which is technically the entry I'll be looking for is the LPSY, is 80% of the 29-minute, right? Well, what's the 29-minute? So when we come over to the 29-minute, there she is. Wouldn't you know, it's the most voluminous candle out of this push, right? It is the candle that created, again, the break of structure, and which led to the next leg, right? Which led to our next leg. So that's why, taking off the open, you're talking, I think it was something like a 6 pip stop. Yeah, 6.7 pip stop. So the 34. Yeah, same thing. Yeah, it looks pretty, I think the 29 might have a little more volume, but yeah, same area. But for me, the most important thing is it lines up with that 15-second open of the test of the UTAD. So that's where I'm going to be looking for continuation moves. And then of course, where am I looking to take this bad boy to? Well, my next area to partial out is 125 flat, right? When we get to 120, when we get up to this 125 area, I'm going to be looking at price. I'll be looking for price to give me some really nice pullbacks. This is going to be a 1 to 121. This will be a 1 to 80 and then a 1 to 30. Ideally that's what I'm looking at. Yeah, and then obviously what I can get into here to work this down. Let's see, with the time frame thing, do you like divide or multiply numbers? Do you just randomly put? So yeah, like add the candles up. I can't explain it. I don't know how I find them. I guess experience and just kind of like, I don't know, so just add the candles up, so like I can see right off the bat, like I'm looking for this candle, right? So we're on a 5-minute time frame, so what do we have? Like 1, 2, 3, 4, right? So I'll be looking between like a 20 and 30 minute, and just start working it up. If you're on a 1 hour time frame and the candle you're looking at is 2 candles, get up to the 120, and just start working it up. When you're working, I typically go in increments of 5, maybe 10. When I find it, then you can start really going back and forth and finding the exact candle. So could we look at EJ next? Yeah, throw me your chart. Yeah, I honestly don't have anything on EJ to take, but if you got something, we'll take a look at it. Maybe I'll find myself a position. Yeah, he ends up here, man. We're walking up. We're walking up. So anyway, this is Chef JPY. This is what I'm looking at. I like it. You know, I'm going to continue to take this down. All right, continue to take this down, and from a higher time frame. Remember, we're bearish on every time frame, and I'd be looking to take price. You know, the next area I'm going to be looking for to come into prices right here, around like the 123, and then ideally maybe something in here. All right, so you were looking at EJ too. Okay, yeah, we'll take a look at EJ here when we get up there. All right, so I will ask you this on EJ. What did this schematic do? Where's structure? Because I'm pretty sure that structure is here. So if this is lower time frame structure, you have a accumulation that's done nothing. You have a reaccumulation that failed and then now is in distribution. So we'll talk about it. You know, we can definitely talk about EJ. I personally don't see a reason to take any trades on it. Let me look at GA real quick. Hold on. So GA did absolutely nothing. Okay. Yeah. So I just give you this. I'm bullish on GA. I was looking to hedge it from maybe up here. I do think now at this point, this is just going to turn into a reaccumulation. Any way to make it the YouTube stream quality better? No, man. Not that I know of. Yeah, man, not that I know of. I think it'll get better. I think it's just the internet, man. So, yeah, I think it's, let me just see. Let me just see what my internet speed is. Yeah, because I'll tell you right now, like when my internet, when it gets crappy out. Oh no, I'm running almost 150 megs per minute or per second. So it's looking good. Yeah, I think it's YouTube, man. I think YouTube's just compressing it, man. That's what you got on EJ. Hold on, let me see. Yeah, but this isn't a distro. This right here is not a distro. So it looks like maybe like a redistribution, but yeah, we'll take a look at it. Hold on. Yeah, on GA, I'm looking for buys down here, and like I was looking for a hedge, but that's it. Like this thing has just been massively bullish. I'm still holding. Where's that position I'm holding? I'm holding one position. Where am I? Yeah, I'm holding this one position still. That's it. So, you know, this is what's maintaining structure right now. So we have, this is what's maintaining lower time frame structure. All of this is just one big leg. So, you know, this is the area I'd be looking first. If not, definitely down into this area. And I'm looking to hedge it, but I do think this is potentially going to be a reaccumulation. If it does turn into a reaccumulation, the play is pretty simple. You know, like what I would be doing is maybe London does this, sweep the Asian low. We come up, make the high, and now this is where I'm going to be playing out of the shakeout to go higher. So that's how I'll look at it. Yeah, it might be, dude. It might be just YouTube. So, it's hard to see the candles. All right, my bad. Well, here, hold on. What if I do this? Some of you guys don't have the wide screen. There we go. Yeah, thoughts on GN? Let's see. Yeah, I'm looking at the same stop, same area, but I'm not going to take an entry during Asian. Yeah, your point of interest is correct, and yeah. Hold on. All right, so that's GA. EU, we'll talk about EU because EU is actually going to be a pretty good play. So EU, we have a really nice type 2 accumulation that happens in the lower time frame structure point. Pretty clear, like we've now made a new high. So this is what's maintaining for me. I do want to come into this candle from FOMC last Wednesday. And I mean, just here it is right here. You know, it's 80% of the 1 minute, 80% of the 13, 80% of the 97, and 50% of the seconds time frame reaccumulation shakeout. So my suggestion, go over here, just dump down to the 97-minute full volume candle, 80%. Get down to the 13-minute, same candle, 80%. Get down to the 1 minute, same candle, 80%. And then this is what I was talking about, the shakeout. So here's your reaccumulation, right? We have our attempted distro right here. This is the shakeout. So when you measure just the shakeout, it's 50% lines up right here. So this is what I like, you know, stop loss. I'm going to put my stop loss just below that wick. That's where I'm going to be looking for EU. No, I'm not, honestly, that's the only thing I'm looking on EU. There's no other play. In my opinion, for me, for my risk, there's no other play. That's how I'm going to play it. So I took partials after FOMC. I took the partials right here when we broke this lower time frame structure point, and just look at what we've done out of this accumulation. So invalidated supply, invalidated supply, invalidated supply, and we got that sign of strength. So, you know, ideally something like this, and then I want to go higher with it. All right. Yeah, cool. So that's EU. All right, here's EN. So EN, what are we doing with EN? So EN never broke any highs, man, and that's a shame. So I actually broke even on my last position. So out of all of these buys, you know, I don't even know what these were. I'm gonna have to journal it later. So I took a 1 to 19 to 9. This was at a 1 to, all right. So my final area was a 1 to 27, 53, and 36 out of all 3 positions. But you know, what did we not do? We just couldn't make a new high, and we couldn't make a new high up here. So there's nothing really for me to look at until, let me just see this. Hold on. Let me take all the drawings out for a second. So we are, what is maintaining structure? So this right here is what's maintaining our lower time frame structure, and this is just a whole lot of noise. Right. Yeah. So if we come down in here, I'd be looking for a buy. I'd have a limit order down here. I think I do have a limit order. Hold on. No, I don't. So yeah, this is all just noise. So I'll tell you right now, I'm not looking for anything out of here, because this is all just order flow now. And yeah, not something I want to play out of. So EN for me is nothing, and it's actually I'm out of the trade on it, minus this order. So I still have this order active, but all of these things in here I've taken. The last order I had was a break even. Yeah. Yeah, we covered that. Hold on. I have no idea what a breaker block is, so I couldn't tell you, man. Would you look for sells on EU to hedge the buy on EU? So, all right. For me, I'll tell you this, right? On the daily, we're bullish, right? Daily, we're bullish from down here. From an intraday perspective, we are bullish from right here, right? This is where we're bullish from. And then from a lower time frame perspective, we are bullish now from over here. So we're bullish on every time frame. Why chance the hedge? You know, it's one thing if like we're coming into a decent area, if we have a reason to take the hedge, but for me, the only area I'd be looking for the hedge on EU. The only area I'd be looking for the hedge on EU now would be out of this area up here. That's the only area I'm going to be looking at it. You know, this right here, I'm not interested in. We've already invalidated so much supply that, yeah, I'm not this right here. There's nothing in here that is going to give me to sell this down. So that's just my opinion. I'm not going to try and risk anything. let's see. Can you explain why you discard order flow entries? Why do I discard an order? Because my journal tells me to discard it. That's why. Yeah. You know, if listen, I'm sure there's people on this call right now that do really well with trading order flow. I can tell you I don't. For me, order flow changes so often that I'm not a ping pong trader. All right. You know, I don't look for 20 trades in a week. I look for 10 trades in a month, you know, and that's why for me, order flow means nothing. So yeah, I mean, if you like order flow, trade it. You know, if your success rate in your journal tells you to trade order flow, do it. You know, my journal, like most of you guys know, I used to counter trend trade all the time last year. When I went through and did my end of the year journaling and I calculated everything, you know, I found that, yeah, I could have been a greeter at the grocery store, you know, for $12 an hour and made about the same amount of money that I did trying to counter trend trade. So counter trend trading over for me. You know, I talked about it at the beginning of the year, you know, our first call after the new year, and I've held true to that. You know, most of you guys know I don't counter trend trade unless I'm hedging it. And in the hedge, it's got to be in a logical point. So yeah, that's what I got on that. All right. So EU, yeah, this is what I'm looking at right here. So I like these credentials. You know, I like this setup. And this is what I'm going to be playing, you know, once we get down in there. We talked about EN. EN is dead for me right now until we get back into either structure point, which is going to be down in here, until we get into structure point, or until, you know, potentially we, you know, I don't even know if I want to play an order flow play. I don't know if I want to, if we make this high and we create this over here, then I'll be looking at it. But that's kind of about it with EN. EJ. So let's talk about EJ, right? So we got a failed reaccumulation. So this is actually a distro right in here. So we did actively distribute. Hold on. Yeah, yep. I'm going to talk about indices. Yeah, it's on my primary list. So, yeah, I'll tell you right now, I'm not looking for buys on this one bit. I had this ready for a buy in case we broke lower time frame structure, but I'm not interested in doing anything with it. I'm not interested in looking for the sell either until we break intraday. So this is what's maintaining our intraday. Until we break this low, I'm not going to look for sells because at this point, higher time frames bullish, intraday's bullish, lower time frames bearish. So I will look for buys, but I need to look for buys at a structure points. And right now we're bearish structure. So until we break this, then this would become lower time frame structure. And I can take maybe a potential entry out of this, but not until we break lower time frame. And there's nothing for me to play. There's no, you know, I'm not looking for a distro because the distro is going to be counter trend. Yeah, I mean, I know, who is it? Let's see. You caught this distro here. What was it? 29,834. 29,834. So you played it out of here. Right? Is that where you played it out of? I'm guessing that's where you played it out of. This is where you played it out of. So I guess my question is, what made you look for the sell right out of here? I guess would be the question. Just curious. I mean, I could see, like, for me, I'd be drawn into this area here, specifically this candle. You saw volume. Okay. All right. If you saw volume, great. Yeah. For me, this was an attempted accumulation. So I would have waited honestly for price to confirm the redistro, break through the ice, confirm the redistro, and then take the sell. But yeah, now for me, there's what time is this? Yeah, no, I can tell you that I wouldn't have taken it. Yeah. You thought it was an accumulation? Yeah. Okay. Well, good. Yeah, I'm not. Yeah, for me that wasn't, there wasn't anything to play on it. Yeah. Yeah, especially with the break of structure. I guess I don't know. What were you looking? So on the 1 minute, yeah, because like so here for me, let's just say right here, right? For me, this is still bullish, right? Because what do we have? We had, a failed distribution here. And then what do? We push in a new leg. We make a new high. So this is what's maintaining. We push in a new high. So this is what's maintaining. So I would have at least needed this to get broken to trade out of this distro. But yeah, it is what it is. Good catch. I personally wouldn't have taken anything on it though. Can you explain why do you have seconds time frame if you don't trade order flow? Why do I have this seconds time frame? So I can get the right price action. Yeah, that's why. I'll take a 5-second schematic. I'll take a 1-second schematic if it gives me the proper entry protocol. Trading a schematic for me, yeah, is it technically order flow? Yeah, but it's just not order flow. Like I'm not, here's an example, right? Order flow is this. So, and this is how some people, I know that this is how some people trade, right? Like, they would play, okay, so what do we do? Every high and low means something to them, right? So out of this price action in here, well, what do? We made a high, so they're going to take a buy out of here. And then we made a high, and they're going to take a buy out of here and get clapped. And then, all right, so wait a minute, now we're going to take a sell and walk the sell up, all right, take an entry out of here, we push down, re-entry out of here because we made the low and get clapped. Like I'm not trying to take a lot of entries, for me, it's about equity preservation and taking high probable trades. That's kind of how I'm playing it. On your odd, bro? What do you got on your odd, man? Let's see. Yeah, I know it's in the area. It just sucks the timing, man. It just sucks the timing. Yeah. So I'll tell you right now on EJ, I'm not looking for anything. EJ is just, this is all just order flow for me. We haven't broken any kind of structure point. We haven't broken the leg. So yeah, there's nothing for me to do with EJ. EA though, EA, it sucks, bro. EA is in this stupid point of interest, man. This is gonna piss me off. So ideally, I was looking at it here, right? I wanted the 9-minute or the 54-minute. You could see I had the box here. I wanted the accumulation. We had this morning. We had price come in, and I talked about where okay, this is the redistro distributions up here. What do? We tapped right into supply and now we're pushing lower. So the question is this accumulation going to hold? And in a perfect world, what are we talking? Let's see. So I don't know if it's going to have enough time. I don't know if it's going to have enough time because London Open is going to be, yeah, I don't think it's going to have enough time. So you could see it's already starting to build a schematic. And potentially I'd like to see the spring tap in to either my 50% of the 9 or 80% of the 54-minute, and then kind of do something like that. So I will not be awake for it. And I'll tell you right now, I don't know if I'm going to set a limit on it yet, because this is what maintains lower time frame down here, right? This was the cause of the break that did this. All this is the reaccumulation slingshot that did it. So, I do like the area it's in, but I refuse to take an entry during Asian session on it. So yeah, this is going to be a tough one, but I'm going to stick to my trading plan. My trading plan says no trades in the yellow. But yeah, I would look into this area right here. I'd look into this cause. There was a lot of good divergence between this and EN on it. Not only that, but this swept the Asian low. So this is Asian session right in here. London comes in, sweeps it, and then makes the new high. So this is where I'm really going to be paying attention to. Yeah. So EA, I'm still bullish on EA. I mean, if you look up at just look at the 1 hour, right? EA is a little different than EN. All right. EA is just monstrously bullish. We have at this point, this is what's maintaining the lower time frame structure. So intraday is being maintained way down there. Could we come into like maybe this here? Yeah, we could. So if this ends up failing, I'm going to be looking into this reaccumulation. And if not, if it doesn't, like I said, I mean, if London gives me the spring and then break structure, I'll take the mitigation off of New York. That's kind of how I'm going to play it. All right. But yeah, I do like where EA's at. If you're going to be up during London, this is something I definitely would pay attention to and just play it off the schematic. I mean, yeah. What's significant about that? What's significant about it? It's so this is the reaccumulation that causes the new high, right? So this is the shakeout right here. This is the shakeout that caused the new high. That's why. Yeah. Yep. So it's my slingshot. Yeah. And it just sucks. It is. And this might have been the spring right here on the 15-minute. This might have been the spring. Yeah. Right on that 80%. Yeah, I mean, this may have been it. And if it is, you know what, tomorrow morning, I'll just play a reaccumulation. I mean, that's pretty much it. I mean, you can see clean schematic, right after the news event. SC, AR, ST, UA, STB, spring. And, did we break? Yeah, we did. And it looks like maybe even a reaccumulation in here. So, I mean, if I miss it, like I said, I'll just get in off a reaccumulation. So, yeah. You have an alert set for it? Yeah. I'm not going to be up for it, but I mean, really clean schematic. It's just Asian session, and I don't play with Asian anymore. So that's EA. Moving on, Chef JPY, right? Chef JPY, we finally got the break. It's only taken like a month and a half, but so we finally got the break out of the type 2. And what I'm looking, Chef JPY is one of the only pairs that's maintained structure, right, on the intraday. So out of this type 2, obviously this is the slingshot. This is the extreme, right? So what I want to see is an accumulation in here or an accumulation in here for us to continue this higher. All right. There's no limit order that I can set, just because the only confluence I've found in this thing requires like a 25 pip stop in this. So you like playing schematics? Yeah. If we're bullish on everything, and obviously the first area that you need to take the play out of is order flow, but I'm only going to play it out of the reaccumulation. I'm not just going to play, I don't know. I know a lot of people like playing order blocks and stuff like that. I'm not just going to put it because there's a 5-minute order block there. It's got to be a reason to it, but so Chef JPY, this is ideally what I'm looking at, from a higher time frame. You can see like we've maintained intraday, everything just looks super clean in here. Did we come into the area, to retest this reaccumulation? We did. Obviously I wanted to take a buy out of here, and we didn't get it. So I'm going to be waiting for accumulations to take this higher. All right. Yeah, cool. Okay, very good. Yeah, cool. All right, so now here's what I'm looking on the active. So AutoCAD, we're light years away on AutoCAD, so I don't even have to talk about it. AJ, I have nothing on at this point. Like, I'm not interested in anything down here. This was only if we broke structure, and we did it. So, this is just continuing bearish, and I'm not looking to play a sell on it until we make a new low. AU. So AU, kind of the same thing. I'm going to be looking, if we can get up into this redistribution area here, I'll be looking for a sell out of this, but we're 150 pips from it, and you can just see how slow this stupid thing is moving. So I am definitely seeing weakness in the Australian dollar. You know, that's why I'm looking for a lot of these continuation plays down. CAD-J. So when we talk about CAD-J, CAD-J was a, you know, it was a pain, man. You know, obviously you can see this is what's maintaining structure. We push in a new low. We have a distribution that ultimately turns into a reaccumulation, but then in this area here is where we get that distribution. And this was, I think, Friday. I was looking at this. The only way I was going to get into the trade was off of a type 1 schematic. I wasn't going to play the type 2. And you can kind of see I was just sitting here. I was waiting for the UTAD. We never got the UTAD, so no trade. I do like what CAD-J is doing though. Like we are showing this push down, and we have invalidated demand, right? We have traded below here and created that break of order flow. So I do have an alert in this area right here. This is where I want to pay attention to. So if I can get a distribution, because at this point it's not structure, if I can get a distribution in here, I'll play the schematic to take it lower. And that's what I'm looking for on CAD-J. You don't think that Chef JPY will do the same as CAD-J? No. So the reasoning behind it is from a fundamental standpoint, right? So CAD JPY, right? I already showed you that the JPY index is bullish, right? The reason that the Australian dollar, the reason that the currency, the reason that the Australian dollar, right, is bearish, and I'm looking for the Australian dollar to come down here. The reason that the New Zealand dollar is bearish, I'm looking for it to come down here. The reason that the Canadian dollar has broken structure, right, and now I'm looking for it to continue bearish, is because they're commodity driven currencies, right? Commodities. They're also anti-per diems, which is just a fancy word of saying you've heard of hard and soft currencies. They are a soft currency, right? They're the opposite of safe havens. So especially with the run up, if you guys aren't paying attention to the news, you know, everyone's in panic over this Delta variant of COVID-19. Where they're talking about lockdowns, you know, people in Australia right now that are going into lockdown again, you know, that's bad, right? That's bad for commodity driven things, because what we're going to lose out on that stuff. You go to commodities and you go to US oil, right? Let me ask you, has US oil distributed, and has it tapped into an area of supply? And do we now anticipate this to come lower? Yes. So if oil is going down, oil is the biggest commodity for Canada, right? For the Canadian dollar. They're also, you know, from just a trade perspective, fundamentally, if we start talking about more lockdowns and stuff like that, fundamentally, Australian, New Zealand, and Canadian dollars are going to significantly weaken it. Conversely, when we have something like that, we expect safe havens to rally, right? CHF is a safe haven, right? Swiss franc is a safe haven, as is the JPY. That's why we're seeing JPY going higher. That's why we're seeing the Swiss franc going higher, right? So yeah, no, there won't be any lockdowns in Florida. Trust me. Yep. And that's why Chef JPY I'm bullish. CAD-J I'm bearish, because we have, you know, go back to structure. You know, CAD-J's broken structure, right? The Canadian futures has broken structure. You look at what is it, S, right? Yeah, you look at Swiss franc, right? And what's the Swiss franc showing us? So the Swiss franc is showing us that we had an accumulation. There is a distribution here. I want to see now what we do. You know, does this ultimately turn into a higher time frame reaccumulation? So, you know, fundamentally, that's why I'm looking at it from a structure perspective. It supports it. All right. Yeah. Yeah. Florida's all good, man. What of gold? Yeah. So we'll talk about gold, right? Gold is a safe haven, but it all depends on, so like if you're trading, I'll tell you right now, if you're trading gold versus the Australian dollar, I'd be mad bullish on that, right? Gold versus the US dollar, this is going to be a tough one, right? That's going to be a tough one. I'll tell you from a structure perspective, it supports coming down bearishness, right? So we'll get to it. I got gold on here. So Yes. Yes. You gotta love DeSantis, man. All right. So Euro GBP, listen, again, for me, this is maintaining structure from the intraday, right? We had this leg push in, and all of this has just been what? Bearish order flow, but it's been good bearish order flow, right? Like what we've been seeing. Yeah, no, I live in Florida. It's nice, it is nice. Um, so out of this, what do we see, right? We had a distribution. Distribution pushed another new low. We tap into the slingshot area that causes that low, and what do? We have another redistribution. Well, this redistribution did what? All this was just an order flow break. It came back into this distribution and then pushes in a new low. So I am looking for sells on Euro GBP. I'm not bullish on this. I'm looking for sells. Where I'm looking for is, you can see this H1 candle right here. This is where I'm looking. When we break it down, what happened in here, it was a distribution that led into some more price action. But this 1 hour candle is where I'm looking. You look over here at the 1 minute and what happened. So you can see that price had just a ton of liquidity, right? Ton of liquidity. A lot of it Asian price action. We had imbalance sitting right here, and what do? We mitigate the imbalance. What time frame was that imbalance? Was it like the 5 minute? I normally put it. Maybe it's like the 15. Yeah, that's what it was. So you can see the 15-minute imbalance. We mitigate the imbalance. So we sneak the highs out, right? Sweep all that Asian, mitigate in here, and then this is what causes the break to the downside. So that's where I'm looking on Euro GBP. Now, Euro GBP moves as fast as, I mean, geez, this is going to take a long time. So I'm in no rush. You can see how long this thing took, over 3 months to just do this, for 200 pips. So I will be looking, like when we get into this area here, I will have a limit order off that 80%. And then I'll just try to play a schematic off of it. Yeah. We'll talk about indices. That's why I think we're going to get some bullishness or bearishness on the indices. So that's Euro GBP. GN. So yeah, GN, man, GN's going to piss me off. Oh, GN's going to piss me off. All right, so let's look at it, right? GN, we push in this high, and then, reaccumulation, make a new high. Okay. I really like all of this price action that we're seeing in this, right? I like the reaccumulation. Yeah, California, bro. You're crazy, bro. You're crazy. Yeah. So what I was specifically looking at was in this reaccumulation, because this is the reaccumulation that causes the break, and it invalidates demand, supply, right? We take out that distro. So where I was looking was the 83-minute candle right here, most voluminous candle. And you can see we tapped into the 50% with the news, the NZD news. And then of course, I was looking at the 13-minute. This is something that I was going to potentially play out of. I did like the price action, but man, I just don't like it that it's an Asian, so, we did come into the area that I wanted to play out of. I'm just going to wait till later. I'm going to wait to see what happens. Asians kill it. Yeah, but that's all good, man. I'll let it be. I guarantee you, just pay attention to all your Asian session highs and lows. And I can tell you this year, just in this year, there's only been 2 trades out of everything I looked at that actually held during Asian session. So yeah, I'm not too worried about it. Yeah, bro, I can't fit in a Lambo. I can't tow a boat with a Lambo. You'll never see me buy a Lambo. Yeah. But like I said, we are in the area. I am bullish on GN. I do want this to continue. I mean, just look at it. Look at the intraday. Nothing about this tells you weakness, right? Nothing about this tells you weakness. So, I'm personally, I'm going to be waiting for another entry. If, and just hypothetically, let's just say that this does hold, right? Let's say we do this, and then we come up and break some order flow. Well, if we start to distribute, right, and we get that shakeout, and then we confirm a reaccumulation, well, now I know I'm playing out of here. right? I'm going to play out of here because this is the shakeout candle that needs mitigation. So, you know, if I miss it, I miss it, and I'll just play out of there. All right, that's how I'm going to do it. NZD CAD, I'll do the indices last year. I'm almost through it, but NZD CAD, you know, we were looking at this, right? We were looking at an accumulation out of this reaccumulation, and essentially this was the news event, right? I wanted to mitigate this right here. I did take an entry last week. I ended up getting stopped out at break even on it, and it sucked. And ultimately what happens is price accumulates. You can see the accumulation right here. Price accumulates where I wanted it to accumulate. I'm curious, did it come into 80% of that thing? Hold on. So that's 80%. Did it come into 80% of the entire push? This is 80% of the push. It did come into 80%, that bastard. I wonder what, hold on. Does anyone, yeah, no, I'm not, yeah, let's see. So let's just look at it. What would I thought I had it marked off, but actually, you know what? I take it back. Hold on. I did have this thing marked off. Hold on. Let me go to my journal. I did have it off the seconds time frame somewhere. So pending, hold on. This was from July 13th on NZD CAD. Bear with me here, July 13th. Hold on, I just want to see, I want to see exactly the price point that this thing came into. NZD CAD. NZD CAD. Oh, you know what? I don't think I'm going to be able to get it. Let me see. 5 seconds. Can I go to 1 second? I could. All right. So in here, what is this push? So this is like the 13-minute, 12-minute, 11, 10, 11. Did it come into this 11? I think it came into that 11. It either came into the 11 or it came into this right here. This one up here. And I'm not going to waste too much more time with it. Did it come into the 11? Son of a gun, it came into the 11. Son of a gun. All right, well, that's it. Sounds good. That would have been a nice little entry. No worries, no harm, no foul. So, all right. So she did come in there, and you could see the only issue is it came in at market changeover. So this is Sydney session open, 5 p.m. Eastern. There's no way I would have been filled on it anyway. So, you know, it sucks. They do this crap sometimes, and it really, really pisses me off because it keeps me from getting into these trades. So at this point, the only thing I need to do now is I need us to trade above this high, right? Because there's no play. We've invalidated the redistro. I was looking for price down in here. I mean, you can just see this thing is just really taken off. I do want us to take this high and then potentially come back into here, or, you know, like say this is the reaccumulation that causes that high. This would be my slingshot, you know. So that's ultimately what I'm going to be waiting on. What's the difference between order flow trading and institutional trading or institutional order flow? So I don't know what order flow trading is because I don't do it. Trading institutional order flow is trading a schematic, right? If you think about it, how do institutions fill their orders? In the schematic? That's the whole reason for the schematic. So if you trade the institutional order flow, you're trading the schematic. You know, institutional trading, like just actual institutional trading, is trading like the, you know, institutional candles, or, you know, I mean, there's 1,000 words for it, like the sponsor candle or the the order block, or however they, you want to call it. Yeah. So for me, it's just I play off of the schematic. You mentioned you enter from reaccumulation that does a break of structure. How do you decide which reaccumulation to play from if there are multiple reaccumulations? The one that actually did something. Yeah. The one for me, it's the one that actually did something. So yeah. If is the reaccumulation prior to the push a POI worth watching at what is it at 86.97, 86.97, 86.97. Wait a minute. Talking about way up here. Hold on. Talking about this one in here. Hold on. The one that precedes the break. 86.97. So you got to be talking about in here, right? This distribution, is that what you're talking about? Oh, you look at the wrong. Yeah, no. Yeah, for me, this is it. This is it right here. Yeah. Yeah, no worries. All right, so that's NZD CAD. I was looking at UCAD here for a sell. This is the redistribution that I was looking at us coming into. Potentially still up for it. This ended up breaking me even out of this lower time frame structure. We've broken structure here. So I'd be looking for a sell out of the redistro or out of the distro up here. I really don't like this price action here, but if London or New York gives me something out of this 1 minute, yeah, I'll be looking to take this lower. Same thing with USD Swiss franc, right? USD Swiss franc, I was looking for a sell out of this area. We're just falling down. I mean, at this point, we're coming into this reaccumulation that causes the leg structure break up here. So if we do get a schematic in this area, this may be an area that I potentially will be looking for buys. Yeah, just rewind. GJ was one of the first ones I did. Just rewind if you're on YouTube there, just rewind it. And I'll talk about gold before I get into indices. So gold was actually pretty cool. So it just sucks that it missed my order. Gold at this point, when we did this accumulation, this right here trades below this low and this low, invalidating demand. So what I wanted to see was a distribution out of here, and we got one, right? Like I was really tracking this. I really wanted this position. You come into the 1 minute and you can kind of see the price action that happened in here. You had a distribution in here, right? And what I wanted to see was this is that last, area that took out all of Asian price action and then made a low. So I was looking out of here. I was actually looking at the 80%. I don't remember what candle it was, but I was looking at 80% of this right here. And you'll see that price comes in right at New York equities open, spikes up right into the 50, not into the 80. And I was a little upset about it. There it is right there. Spikes in. So then, of course, what I was looking at was, well, what's this price point here? So for me, it was the 5 second. I had a limit order off this 5 second open. That's what I wanted to play. It's honestly what swept all the liquidity and took out all the highs. And we just didn't get it. So I know some people were able to position themselves in the sell, and now, I'm not interested one bit in this accumulation here. I'm pretty confident, especially the way that we're doing this in here. I'm pretty confident this is going to just turn into a redistribution. I would have looked for a hedge out of this position here, like 80% of the 15 second. But at this point, because I'm not in the sell, I'm not going to try and get a hedge in. I got to be in the position in order for me to work the hedge. I am looking at for this to come lower. I mean, you can see that what we have done is we have distributed, right? We have distributed in the area that maintains the intraday structure point. And we've broken some, obviously we've broken lower time frame structure. I'm looking for this to continue lower. And the main reason I'm looking for it to continue lower is, again, silver. Like if we compare it with silver, silver's got a ways to come down. I'm looking at silver. I'm looking at silver to come lower. Ideally, this has just been sideways, but I'm looking for silver to come back into this area here. You know, this is where I want to see silver come into. All right. Yeah. So, and then we'll talk about indices, right? So let's dive into it. So here's US 30, right? I know I talked about it. I'm looking for a potential sell. At the very minimum, I want to get back into this area right here, either this reaccumulation or this accumulation that happens down here is where I want to take it to. You know, from a structure perspective, yeah, I mean, this is what's maintaining that structure point. All right. But we do have a valid distro. You know, here's how I essentially marked it out. Clean distribution, and man, I was on, what candle was that? So the 30-minute, hold on, what candle did I pick? So 28-minute maybe, or the 27. It's got to be the 28. So 28-minute is what I was looking at out of this candle right here. So we're in it. I didn't put a limit order just because I don't trade it outside of New York session. But this is the area I was looking for distribution, you know, and this was the key, right? Like not only did we break the structure point here, right? Not only do we exit the trading range, but we also broke this low that causes this high, right? So I'm looking for sells on US 30, at least out of a lower time frame distribution. If we get that lower time frame distribution, that's what I'm going to be paying attention to. I really like, you know, I really like having or the ability to get into this area or into this accumulation down here. And we'll see, you know, especially with some of the fundamentals coming out this week and next, we may get that push. Now here's where we have the divergence. So you can see on SPX, this is how I wrote it out, right? Trading range, climax, test, MSAL, up thrust, and then we make a lower low and we break this low here. So, you know, ideally this is a lower time frame distro. It's doing the same thing as US 30. I just like US 30 better because it is a type 1 where SPX is a type 2. All right. And you can kind of see, like, again, when we just compare them, let's see, can I put it? Yeah, so you can see right in the same price point. Let's see. There we go. So right in the same price point, you got that divergence. You got US 30 made the high, so it's showing you it's the laggard where, you know, SPX is the leader. So that's why I'm kind of favoring US 30. Yeah, it is so much cleaner, man. So much cleaner. So I'm going to be looking for those sells on US 30. You know, ideally, you know, something along the lines, like if I had a Christmas in August wish, it would be that you know, maybe we get like a schematic printing out here, and then this is all Asian session. New York, or I'm sorry, London does that, breaks, and then I catch this to come lower with it. You know, that's kind of how I want to play it. But yeah, this thing, it's super clean for me. Really nice distribution. You know, I'm not going to set a limit off the 80% one because the stop loss is just way too massive. The stop loss would be 60. Yeah, the stop loss is 62 points or 620 pips. You know, there's no way I'm taking that. And, you know, I like US 30. I like my stop losses to be under like 35 is pushing it. You know, I like to get into like a 10, 15 point stop loss. So you already had the limit set on that extreme. Yeah. I mean, it's just, for me, I need a 1 to 10, and, you know, like so this right here just would eat up my margin. And you can see, like, to make a new low, it's only a 1 to 6. So that's the only reason I'm not doing it. Yeah. No worries, man. Absolutely. There's no worries. I mean, listen, especially if you have the ability not to worry about margin, take it. For me, the margin is what kills me. Like I don't have available margin, and I gotta, when I'm a limit on the amount of trades I take, I would rather make $250 per every 6 pips than $250 for every 16. You know what I mean? So I got to be selective on what I'm trading, especially when I'm managing all of these open trades that I have over here. So yeah, US 30, I really like. Now, NASDAQ's a little different, right? So when we look at NASDAQ, and this is why I favor US 30 over NASDAQ. So NASDAQ distribution, we push in, we come and we mitigate out of it, but then that's it. We just did this, right? We just did that. That's all that happened. Okay. Yeah, here's a reason why, here's a reason I'll put this on why I don't like Asian session. So here you go. So the yellow's Asian, right? Asian session, New York takes it out, we make a new high. Asian session, New York takes it out, we make a new high. Asian session, New York, hold on. New York, open, equities open, takes it out, we make a new high. What do you think happened here? Asian session, New York takes it out. Asian session, this was actually London. London comes in and this actually was a really clean entry. I don't know if you could see the accumulation in here, but this equities open mitigates it perfectly, and then takes off. So actually here, you know what? And just for, yeah, man, have a good one. So where would I have taken it? I would have taken it 2 minute, 3 minute, 4, 5, 3 minute. So that's the spring. So I would have taken it off of that. Is that where price comes to? Let's see. Is that where price comes to? I'm going to laugh. Son of a gun. That's where it went to. All right. Well, yeah. So that was clean. That was clean. Yeah, but that was the entry. That was a really clean entry. And ultimately what's it do? You have your market cycle, right? You have your accumulation, you have your attempted distro that turns reaccumulation, and then we take out the Asian highs. So yeah, NASDAQ right now is not on, something I want to actively trade until we get back into some kind of structure, So like I said, we either need to make because this is just order flow, right? This is just noise. So we need to make a new low, let this come low. And ultimately what it's going to do, it's going to be a redistribution, right? So you have your distribution. Now you have your attempted accumulation, 1, 2, 3 drives, right? Let this trade lower like so. And then I'll be looking to play like that to go lower with it. So that's kind of what I'm looking at, but for indices, US 30 is what I'm going to be playing with. I think US 30 for me is the cleaner entry, cleaner trade that I want to play out of. And again, targets for me, like short-term targets are going to be right here. This is going to be my short-term target, and then potentially into this accumulation. And who knows? I mean, if we start talking more lockdowns, right? I mean, just look at here, what still needs to be kind of played into. And, I'd be looking at this all day long, so we'll see how it plays out. Actually, what's it look like on the, so let me just see, what's it look like, 8 hour. So on the 8 hour, I mean, what do we have? We have, a climax to an AR, to a secondary test, to a secondary test, to an MSAL, to a up thrust. Up thrust does come to 50% of my trading range, and here's your UTAD. So this could be something, like, especially if we take this low. If we take this low like that on a higher time frame, potentially see something like this to really get some movement down. And the question is there a reason to come lower? I mean, I don't know how, I don't know. I don't know what I don't know if I want to be wishful about this or not, so it is what it is. No biggie. So that's pretty much it. That's what I'm looking at for the week. That's how I managed, hopefully you guys picked up some of like the trade management stuff that, goes into like how I work out the positions. Working some of the entries in and just following what price action's giving me, especially within the schematic. That's honestly the key. And then just go from there, and I'm really bummed about this. Really bummed about EA in this. Oh, that's going to drive me crazy. All right. Well, we'll see. We'll see. How do you measure your equilibrium of your trading range? You mean like it coming back into like 50%? Something like that. I'll tell you, like, I stopped caring about the lengths of the moves and how they come in. I stopped worrying about that. What I care about now is just the market cycle. Essentially, follow the market cycle. If you follow the market cycle and follow structure, it kind of gives you the indication of who is driving the market, supply and demand, and where they need to come into next. So that's kind of how I play it now. It's just a little simpler. I used to measure the moves. I used to see, okay, well, I want it to come back into 50% and stuff like that. I will tell you that, the market comes into, some of these higher time frames still into the 50 and 80%. It's just, I'm not going to take an entry just because it comes into 50%. I'm going to come into the entry on where the pivot point is. So, yeah. Oh, you mean the range? Yeah. So your trading range is always defined by your climax to your AR. So yeah, yeah. So if it's your climax here to your AR, that's your trading range, right? That's what I measure. And if it's this climax to your AR, it's that. So climax to your AR is always what defines your trading range. So I'll measure that to make sure that price comes into 50%. Doesn't mean that if price doesn't come to 50%, that it's not going to be a fulfilled schematic. It's just something that when I back tested, I don't know, when I back tested, I think at some point it was like 1,500, 2,000 charts at that point. I noticed that the trades that lost were because we didn't see that pushed into the 50%. So yeah. And that's going to piss me off. So, all right. Well, that's pretty much it. That's what I've got. I've got some stuff on the radar. It's only Tuesday. Tomorrow's going to be Wednesday. My biggest trading days are Thursday and Friday, right? That's where I really capitalize on a lot of trades. And yeah, that's pretty much what I have. So thanks for hopping on. Hopefully you guys got some info from it. And, if you need to rewatch it. It'll be up on my YouTube channel. All righty. So enjoy. I'm going to go grab some food because I'm starving, and I'll see you guys in the morning. Have a good one.